Hey everybody, hope you're doing well. Hope you had a great week of trading. Today we're going to cover the Invesco QQQ ETF, or essentially the NASDAQ-100 for the week of April 5th, 2021. If you like this content, please like or subscribe. Everything we cover here comes from Prep2Grow's big data and AI platform. So it's all our data, information, pricing, and recommendations. So let's just jump into it. So what's the net? So last week predicted that it's going to be flat for a lot of various factors, and it turned out to be very much not flat. If Friday was a trading day, I can very well see that this would have gone north of 4 to 5% gain with the unemployment numbers coming out exceptionally positive or more positive than expected. So it was a great week for a jump in the QQQ. So this week we're expecting that bull will actually continue. There's more signs that it's going to be a bull, a lot of good stuff happening. So let's cover some of the reasonings. So the Qs are at an all-time high. There was some flatness coming out of Q1 and going to Q2, and that's normal. People or companies just get ready for Q2 growth. Growth is back on the table. Q2 jumping to, again, growth rates looking at an all-time high. So is there a bubble in the Qs and the ETFs? There's a small bubble in terms of pricing outpacing company growth, but it's very small. But again, QQQs are doing exceptionally well. Unemployment rate was great this week. It's going to take 13 to 15 months to really come out of the full recovery at this continued growth. If we hit, and what I mean is, if we hit the same numbers we did on Friday every single month, it'll take about 13 to 15 months to do a full recovery. There's still a significant amount of unemployment occurring. We see that there's a lot of growth in the unemployment rate with our own data. So it's still, we would say, still in red, but last week's unemployment rates is going to make the Qs jump this week for sure. Non-FANG plus company growth is outpacing stock growth, which is great. It was pretty flat for a while, but non-FANGs are really kicking into gear. Just for those that are new to the channel, we map FANG, what we call FANG plus, which is the Amazons, the Facebooks, the Googles of the world, and all the ones that make up essentially 65% of the total holdings for the QQQ, separate from those that are not. 65% of the if the movement happens for one of those companies, it's going to move the QQQ more significantly than one that is not. For example, Paycheck is announcing this week, if they have a terrible quarter, it's not going to do anything to the QQQ. But if Amazon has a terrible quarter, it'll tank the QQQ just because of the holdings that they have, or the difference of holdings between the two. There's a note, major financial earnings happening this week, Goldman Sachs, Schwab, B of A, and a few others. Some mixed reviews. Obviously, last week was a hard week for the financial companies with a lot of people taking a lot of risk going into the market that blew up in their face. So just be aware, a lot of announcements this week. It should be viewed as a financial earnings week. We are lastly in a bit of a bubble. The general market outside of the Qs, their stock growth is way in excess of their company growth. And I mention this every week. This is essentially what Michael Burry's talking about. Will there be a pullback outside of this? Probably at some future date. We haven't seen signals that it's going to blow up yet. But certainly I should be very, very wary about the dramatic increase in stock price growth compared to company growth outside of the high tech. High tech is leading charge. They're very well suited to where they need to be in terms of stock price. Outside of that, not so much. So let's jump into who's announcing this week. Let's jump into the growth rates. So last week, stock growth grew about 2.6%. Again, it's higher than we expected. Prep2Grow projections are up 42%, or 6% higher than last week. Essentially, what we do here is we have a baseline from the beginning of January 1st, 2020 compared to current date, and how it goes through the cyclical pullback of, not cyclical, but the pullback of 2020, and how much it's recovered since then. Going from January 1st, 2020 kind of gives a better baseline in terms of one, recovery, and two, just how much growth is really going on compared to now 15 months ago. So good growth in the company, 6% growth from last week versus this week. Again, there's a bit of a pullback coming out of Q1, which is normal. It bounced back up and entering into Q2. It's interesting the analysts are pulling back a bit in their earnings per share forecasts. Hard to fathom why. Maybe it's specific companies that they're looking at, but certainly, generally, the QQQs or the NASDAQ-100 crushing it still, continues to crush it. Let's get into who is announcing. Last week, it was Walgreens and Micron. For those that are new to the channel, we post our write-ups and analysis to the Prep to Grow website. It's just preptogrow.com/QQQ. We predicted Micron would crush it. They did crush it. They were up 7% on Thursday. We don't ever recommend buying and going into earnings. We very, very rarely do. In fact, usually we sell everything for a company that's announcing going into an earnings. But we actually bought Micron going in. We were that confident in the signals that we were getting, and they crushed it. Walgreens also performed as expected. Had a bit of a rough quarter, missed revenue targets, but looking at good growth going out of that, just like we predicted and the data was telling us. So good predictions for last week. This week it's Paycheck, and the following week it's Fastenal. I mean, not a lot of movement that's going to happen because of these two. A very small percentage of the holdings for the QQQ, but should be an interesting week for these two. So let's jump into the price predictions for these two. Prep to Grow application called Grow. So this is our AI screening and recommendation platform. So for those of you new that want to see how we do it, so essentially if you're looking for anybody that's doing an earnings announcements in the next 3 weeks, you just go in your filters, hit yes, hit apply, and you'll see all the earnings announcements for the next week. A couple of interesting ones. Edwards, Bed Bath Beyond. So should be an interesting next couple of weeks. Not a lot of earning announcements again. Vast majority of them are coming out of the finance sector. So let's jump into Paycheck specifically. They're announcing their Q3. We've been tracking them for a while, the last 4 years or so. They're based in Rochester, New York. They're announcing, again, their Q3. They do HR software for mostly small and medium-sized businesses. They're analogous to Gusto and ADP. They've been recovering since the decline of 2020. Essentially, they just crashed when the pullback happened. They almost stopped all growth that was occurring. That really happened about 2 months after the big announcement in May, and they've been slowly climbing out of it since then. The challenge is the analysts are expecting 4 years high from Paycheck. Our data just doesn't support that in any way, shape, or form. While I like Paycheck as a company, I know a few folks that have worked for them in the past. Generally, a good culture, good people. They're struggling. They're about a third of the growth that they were back in 2017 at kind of their height. They have lots of competitive pressure. Gusto, ADP, Workday moving down more into the space at the lower end, really facing a lot of competitive pressure that they're just not really sustained to match. We had a prediction at them back at the beginning of March. Our predicted, let's take a step back. So for their earnings, they're announcing on April 6, 2021. The analysts are predicting that they're going to have a $96.14 stock price point. Again, we don't see that at all. Just the data does not support a 4-year high for Paycheck. Again, like the company, they're just getting hurt competitive wise. It was a put we bought, and it sold. The details are it was just June 18th put at the 85 strike price. We got in at 445 and got out at 530, so a nice little gain there. We got in and out, in 13 days. So nice little gain for us. Since then, they've gone up quite a bit. So our price projection is $83 roughly. They're currently at 98. Their moving averages over the 5, 20, and 10, 200 days are pretty high. Again, we don't see it this high of growth. They could be writing just the tech high, but certainly we don't see support for 96.14 that the analysts do. So this is Paycheck. Next week, Fastenal is the only one announcing their Q1. We just added them, so we won't have this kind of level of detail for them. We just added them to the neural network for predictions. Typically, we don't do public recommendations for those type of companies for at least 60 to 90 days until we work out that's actually the algorithms are doing well at the predictions. But generally, Fastenal looking like they have a good quarter. So let's jump back into earnings and price predictions for the remainder of the week. What you see in here is the graph for analyst expectations for earnings per share and revenue. Again, we break it out between the FANG Plus and the other. Others doing real well. I think the analyst expectations for them are lower than what we're seeing, so we expect that they're going to do well. The next is the FANG Pluses. Again, crushing it. The Amazons, Googles, so on of the world are doing well. Google is looking really good. So if you're looking for to get into a FANG Plus, definitely Google is a good place to go for that right now. They fit our sweet spot of good company growth, lower stock pricing. Well, $1,600, $1,700 share, not exactly lower, but Google is doing exceptionally good for their quarter. Let's jump into our own price predictions. We started to break this out versus bear versus bull signals. We had one price and it was probably a little confusing, so we redid this week. So we see 27 kind of bear bullbacks for companies we're tracking. Lowering price expectations 198. We have a lot of bull signals that are stronger bulls going up to 387, 32. You kind of average that out, or not even average, but do a weighted model for this. Again, it's important to note that the QQQ is weighted, meaning that they don't buy equal shares in all companies. It's heavily weighted towards, again, the FANG Pluses. If you do the weighted average, it's looking very strong. It's looking like 335, 340 for our total price prediction if you do the right mix of the weighted model. So again, price looking good, stronger than it currently is. We'll improve the slide and this data over the next week to provide a little more insight into the pricing side of it. But again, starting to call out bear versus bull so you can see kind of what the downside and the upside is. Let's just jump into the signals around the bear versus bull in terms of just signals in terms of going up or down. We see a lot of bear in the non-fangs. Really been increasing very steadily over the last 2 or 3 weeks. Looking like these companies are going to jump off. For the FANG Pluses, a little bit flat. They are pretty high, but again, we see the FANG Plus is just dominating. What we will do is post all the companies that we see as a breakdown between the two of them so that we're tracking, so that you have a sense of who we're tracking and who's FANG Plus and who's not a FANG Plus. Again, we post all of our information out on prep2grow.com/QQQ. So if you want to see these slides, get a copy of them, look at the write-up for our week earnings announcement predictions, please head there. If not, I hope you have a fantastic week of trading. Looks like bulls are back on the table, but again, be wary. Financial companies are announcing they're going to have some mixed results that we're seeing, and we're definitely in a bubble. So be cautious about your investment. Again, investing is incredibly risky. Option trading is incredibly risky. So invest wisely. If not, have a great week and happy trading. Take care.